Hi, Richard here, Saturday the 14th of August, reviewing the week as it has been. This is a weekly chart of the SPY futures, pretty much the ASX 200, and you can see that the 5 waves down for the GFC. Also want to point out the simplicity of a 200 moving average and the fact that when you're above, you're in long, when you're below, you're in either cash or you are short. And there's plenty of opportunities on a weekly chart on a long-term investment perspective to adding to these positions as they push down. I wanted to show you the makeup of the head and shoulders pattern, sloping pattern. When put in context with the Dow, which is a far better head and shoulders pattern, it makes more sense. But here we've measured the head to neckline. We've pasted that in below the neckline. It gives us a target on the SPY at least of 3,743 points, and you can see the breakdown that's occurring now. We are tracking under the 200 moving average. On the daily chart, yesterday, last night, in fact, overnight action was a very bearish move down. The volume, not shown on this chart, has gone up. The MACD is crossed over and pushing down. So we are on track at this point to certainly look towards the 4,258 Fibonacci target, extension target, and very shortly we'll move our stop in above this point here at entry, 4,418. So that would make it a riskless opportunity. Moving to the Australian dollar, you can also see that it's tracking very carefully, very precisely, I should say, the major indices. It's pushing down. We've got a very bearish candle here. It'll be interesting to see what happens early next week, but this is selling pressure. These long tails indicate selling pressure. It's pushing it under the 250 moving average, 200 moving average, and indeed these ending diagonals usually retrace themselves. So we are on track to enjoy that. If you're short, also you'll note that the RSI has broken down convincingly. Quickly looking at the euro, similar story here. Convincing break down this end. We effectively would like to be short on this, but we're pending short at the moment. We'll look for a little retracement. I'm waiting for 5 down. On a short-term chart, we could even see that, and I'll go to it very quickly. They're quite obvious. This is a 4-hour chart or 240-minute. Down for 1, up for 2, big one down for 3. They're always the most powerful. Up for 4, down for 5. So 2750 is the target here, which it really is on, although they might just extend. So we're watching for that. But anyway, that if we don't get it, we'll look for, going back, we'll look for an ABC, A, B, and up for C, and we can measure that retracement for our target loosely at the moment. But, around about the 129.7 or 130 mark would be the retracement. We'd be looking then to get in short for this trade. Moving on to gold, you can see that this has been doing what we expected it to do, and that is it's pushed up in a, it might not have completed, but it's moving towards the upper end of our resistance at 1220. Possibility as well that it might go to 1233. That would be the upper range, and then we'd be looking to simply go short on a break of a line that we draw here. So stand by for that. I wanted to also quickly go to oil and just show you how clearly that is tracking. This is a wave 2 retracement channel. Little doji star up there, absolute classic reversal signal. You could have entered short on confirmation of that reversal candle and enjoyed pretty much $7 to the bottom of the channel so far. We'd expect this to break through, come back up and retest here, and then continue on down with the rest of the indices. Oil will track the Dow as it is a barometer of sentiment, and if there's not the demand that's required, then it will perceive demand that's required. It will track on down. Last chart to show you is in fact the weekly Dow, just to show you the head and shoulders again. Left shoulder, head, down here, up for the right shoulder. Big bearish candle. And down here is the weakness that's a very good short entry signal on the MACD. because if that breaks down here, that is an absolutely classic short entry opportunity as it was back during the GFC. And here for divergence to give us the hope, the potential to go long, which in fact we did. So on the daily, on the Dow, you can also see increased volume. That's a very bearish sign. So again, we're looking for 5 waves down. Quickly on the 4-hour chart, you can see 1, 2, down for 3, up for 4, down for 5. So this resistance target, a little bit unsure just at the moment, but we could try to do this, which would give us a bit of a view. So 10,156, 10,200 would be a reasonable target here. Okay, that's it.